Besides of myself, Matti Vikkula, I'm the CEO of the company. We will have our CFO, Anna Budzynski, participating, and you are feel free to make your questions at the end of the presentation by raising your hand or making your question directly. What happened last year? What has happened during the first quarter of this year? We saw a substantial demand increase for green energy and biogas, biomethane especially, related to the Ukrainian war. It really boosted the demand for domestically produced green energy in Europe. It in a way made a change compared to the demand drivers, which earlier on were related to the environmental benefits, especially. One other factor which has been now very interesting and important for us, we see a potential in general in the market leveraging the green CO2, which we also produce today in a way we have not seen so far. So these have been now the key drivers in the market, impacting all players and ourselves. And most importantly, the fact is that the European Commission, they changed last year their ambition level for 2030. They increased the ambition to 350 terawatt hours biomethane or bio-LNG from the earlier 170, which implies that we are expecting a total growth from 30 terawatts to more than 300 within this decade. This is now especially driven by the need to have and assure European domestic energy production and to reduce dependence on Russian gas. What does this now mean for us as a company? As you know, we confirmed our targets, growth targets last year. We established our growth organization. We have just recently published our plan to establish ourselves in the German market by setting up a new business area later this year. But we have already identified 2 projects, and we will be able to achieve a level of 240 gigawatt hours with those projects. And this is very well aligned with our overall business strategy. We'll describe then later on in this call the pipeline and the details related to that. What we were able to achieve in terms of our order intake during the first quarter, the most important milestone was the extended agreement and renegotiated agreement with the SL Länstrafik, which implies additional volumes for the forthcoming 3 years, and combined implies that the order book at the end of March was on the level of 2.5 terawatt hours, equivalent of 3.4 billion Swedish crowns as order book value. And this is now based on the value between us as a supplier and the customer. Any potential production subsidy, such as which we have here in Sweden, will then come on top of that, according to the principles we have in our agreement. Simultaneously, the order book for feedstock was on a level of 2.4 terawatt hours, taking company forward. And you can relate these two figures with our annual production, which was last year on a level of a bit less than 400 terawatt hours. So it is something which will be for several years taking the company forward. We have seen substantial volatility with the prices, both in terms of the energy, LNG, as well as the green certificates during the first quarter. However, we still are comfortable with our earlier statements that the price levels in the Scandinavian market, we will see a improvement with the new agreements, renegotiated agreements, with a premium of 50 to 30%, out of which the Scandinavian price level is between 50 to 100%, and in the German market, in certain cases, even perhaps in the range of 300. However, the price levels for the green certificates are somewhat lower, bounced back the latest weeks, so that in general the price level is currently lower. Spot price level is lower than it was last quarter. And then in terms of the order book, 75% of the supply has a duration of at least for 4 years, or it's at least 4 years. And then going to our transition, as earlier described, we are in a transition process. We are transforming the existing business in terms of our offtake agreements. On top of that, we have our growth plan. But related to the existing facilities and the agreements, the transition from the old sales agreements with fixed prices, with annual index, we now see that the market is changing, the change process is continued. And given our current agreements, we see that during the second half of this year, around 30% of volumes to be supplied out will be based on the new agreements. And then for 24, 25, 26, we are in the range of more than 50 or 60% of the agreements and volumes to be based on new agreements, new sales prices. This implies a 10% improvement, 10% unit improvement for 2024 onwards, related to new prices and volumes related to new prices, due to the fact that one of the old agreements, we have received a confirmation with our partner on the renegotiated terms, implying that we will get a better price for the forthcoming supplies for that part. As mentioned, the related to the sales prices, we see the Scandinavian prices historically to have been on a level of 900 crowns per megawatt hour. The premium in the Scandinavian market is 50 to 100%. On top of that, and then the European market, including the German transport sector, is a third category of that, and even including or implying better prices. Overall, the order book we have in the group implies a total average price 1,360 crowns per megawatt hour, including the old so-called old agreements, as well as the new ones. And then related to Q1 as the first quarter this year, important milestone was the decision to propose to our annual general meeting, which we have later today in the afternoon, to change the company name to Biokraft International, meaning that we will then convert our group brand later this quarter to Biokraft. It was a process where we assessed different potential ways to unify our brands. We have today the Biokraft brand in the group, as well as the Scandinavian Biogas, and we came to the conclusion that Biokraft brand is something which is extremely well known already within the bio-LNG market. It is something which indicates and can reposition ourselves in the bio-LNG market in a positive and way, and indicating a certain kind of industrial strength. In Sweden, we saw the cancellation of the biogas tax exemption, not implying us directly short term, That is something which we can clearly see now, but potentially if the politicians are not going to find a reasonable resolution to compensate it, may impact future growth of the usage of biogas and biomethane here in Sweden. As mentioned, we renewed our agreement with SL bus operators here in Stockholm region for years 23-26. And what most importantly, we are in the finalization stage with our investment execution here in Södertörn, Stockholm, and are planning now and preparing for the commissioning of that facility still this quarter. And a project in Mönsterås is progressing well, and the slides or the pictures you have below, they are coming from our facility in Mönsterås. The left-hand side is the actual situation at the site a couple of months back, and the picture on right is the illustration of with the facility as such. So these are the key highlights, and now we go to our financial figures, and Anna will take over. So Anna, please go ahead.
Yes. Hi, everyone. For the financials, we have this summarized slide, and then we have some appendix. Our energy sales has increased with 3%, up to 88 GWh, compared to 85 quarter-to-quarter. And it's mainly due to our facility Skogn 2, also in Norway, that has gone up in production. We had some lower production in BA Sweden, but however, it's better than Q4. And we still working with the capacity utilization. It's still below our plan. Total revenue has increased with 32%, up to 130 million. First, the increased production that I just mentioned, but also that we have reevaluated our estimation of the subsidy that we have in Sweden. In Q4, as you remember, we only assumed 65% due to the risk of overcompensation. But due to that, the landvärme, the biogas taxes in Sweden now has gone away. We have done the estimation that we can fully account for the subsidy in 2023. We have received 100% for 22 and 23, and it's paid out, but we account for 100% now in 23. Total profitability, operating EBITDA, has been approved a bit, up to 6.4%, and that's mainly due to the sales of energy. We have now the mixture of LNG has increased the subsidy level. We have in the COGS increased cost for raw materials and energy that we saw in Q4 is still coming in Q1, but we're hedging electricity, so we're trying to mitigate that. If we go further, we see here is the tables in the same highlight that I just mentioned, so I won't go through these, but as we can see, we have a jump in our profitability, and Q4 with the minus was a lot of due to the subsidy levels and others that we're heading up, so that's good. The cash flow development is for sure impacted by our low profitability. We have high investments due to our project mainly in Mönsterås, and also our Stockholm bio-LNG project that will be commissioned now during the summer. We have made a placement for our over liquidity in a bond portfolio of approximately 230 million. It's a short-term investment, less than 1 year. We have paid out an earnout of 5.8 million. So our cash at year-end was 242 million, mainly due to the investments that we have in equipment, but also for the bond portfolio. Here is our financial position, and as many of you know, that we have financial leasing debt, approximately 250 million in our total assets. And we also have available liquidity in our loan facility of 300 million, and our own we have a buy-in in our own bond of 64 million. So totally we can sell off these, and then we can add on 364 million to our liquidity that's going into the projects that is not ongoing. So net debt is 455 million, and if you exclude the leasing debt, we have 205 million. And now, Matti will follow.
Okay, thank you very much, Anna. Now we are going to look for our growth plan, and this was the first time now we have provided more information on our growth pipeline, and now we are here describing the part of the growth pipeline which is at the environmental permitting phase, investment phase, or construction phase. Potential leads and conceptual study projects are not included at this stage. We have a nice bunch of those on top of this. But these projects which are now more concrete and progressing, we are familiar with the projects in Norway, Skogn, which is already operational. For that project, we have taken over the liquefaction unit. And then we have Stockholm Bio-LNG, which is now in construction phase and to be commissioned soon. These both are extensions, improvements in our existing facilities. Mönsterås, as mentioned, is a greenfield. Södertörn 3 is in our pipeline to increase the capacity at the Södertörn site. It's an extension improvement. And then, according to the announcement we made a couple of weeks ago, we have identified two specified projects in Germany. We know very exactly the locations, but at this stage we still prefer to categorize them as Germany 1, Germany 2. And then we have in our pipeline the Skogn 3, which is up to 90 GWh capacity increase. It is an extension improvement on the existing facility as we see. And then Skånes Fagerhult have we already earlier communicated, given the fact that we received the 155 million Swedish crowns Klimatklivet subsidy for that. And Kalmar this is the first time we openly included in our pipeline. It's a project where we are actively now working with the environmental permit as well. And then we have the one additional project in southern Sweden, which we call here Sweden 7, the seventh potential project here in Sweden, and all these together implying the additional biogas capacity, biomethane capacity on a level of 875 GWh, and potentially majority of that in bio-LNG. However, for example, in Germany, it's still to be defined what is the most optimal way to take that commercially forward. What I would like to emphasize here, as you see that the feedstock which we are now looking especially for, it's a different kind of feedstock from agricultural sector, manure mainly, and other agricultural based waste streams, implying that we are looking for certain kind of standardization of the facilities taking the company forward, and with the objective to win time when preparing for the investment decisions, standardizing not only the sites but also the different functions and modules and components, offering them also benefits during the operational phase. You see also what is the estimated commissioning for each of the projects on the table, and that implies that we are all the projects as we see are aligned with our indication, which we made already earlier, that one CapEx, one gigawatt hour would imply a capex of 4 to 6 million SEK. So I see that the bullet point should include the definition per gigawatt hour. That is the estimation we have with the project and is guiding our internal preparations. They are all also aligned with our 30% plus operative EBITDA margin, which we have defined for 2024, especially, I mean, here the projects which are on investment plan phase or construction phase. Those which are on environmental permitting phase, we are still doing also some feasibility activities, and we will then confirm when we have more detailed plans for those facilities. But of course, our assumption is that they will be also aligned with that target. We are actively now preparing already or starting preparations for the commissioning in Mönsterås, and thus also creating a group level systematical approach on how to build up the teams for respective facility to be established and to be commissioned in order to assure the group level standard set up operationally, but also for commissioning. So this is something which is very important for us. This implies, as said, in order to achieve our 2026 goals, we believe that we have to make investment decisions roughly for four new projects before the end of next year, and we have a high activity for defining these projects and preparing for investment decisions as well, and then assuring financing for these projects. As I reflected, these long-term targets, they are unchanged, exactly the same as earlier on, and now high focus on achieving the 2024 operational EBITDA targets, as well as achieving the sustainable targets of the group and assuring our business plan 2026. How to achieve 2024 operative EBITDA target? This is exactly the same which we published already during the Q4 or within the Q4 report. They are unchanged. 30% increase in the energy sales between 2024 and 2022. Likewise, a sales price increase on a level of 40% per gigawatt hour. We see also a cost increase for our energy production. And when we have launched, commissioned both the Stockholm Bio-LNG and Mönsterås projects and have reached a reasonable utilization level, we clearly see that the company will be then able to provide a profit on the last line. Outlook as well for 2023 is unchanged. Given our transformation, we see ourselves improving the margins during the second half. And during the first half, the challenge we have is that part of the annual index we have on our old agreements is not as favorable as is the cost increase on the intake side. So the first half year is to some extent a bit challenging from financing perspective or financial performance perspective. But this is, as earlier mentioned, unchanged. So these were the key highlights from our report this year, first quarter, and now you are free to make your questions. So I think there was already somebody raising hand, so please go ahead.
It says I'm second, but I'll go ahead.
Okay, please do.
Okay, first of all, a question on input cost situation. Can you just give us a status update here? We know you've struggled in Sweden, especially with high input costs. Has the situation sort of improved during Q1 or into April, or is it more or less the same?
What I can say is that, as mentioned last year, we saw a high increase in glycerin prices. We reduced use of that. or those. Now we see that those prices have going downwards substantially, and they are more attractive even for us now in a way. Given our sales prices, we are able to get a certain benefit for that taking forward. What is one of the impacts for our COGS is that due to the implementation and commissioning of the bio-LNG facility in Norway, we now see that we have now been able to take it over from our supplier, but we have lately also some issues with the functionality of the process before, and therefore part of our production in Norway, we have not been able to fully realize the supply and the income, but we still have had the OpEx cost. So there is part of the cost is related to the fact that there is the cost part without a certain income for that on that yet. We have hedged part of our power supplies late last year, meaning that it's the power cost level is slightly is to some extent higher than it was earlier on, and for some part of it, not fully, but part of it, and we will be on that level even taking forward. So I would say that the key opportunity for us now for in the near future is to assure high utilization of the capacity and the costs in Norway, and the key actions have already now been implemented to the maintenance actions to achieve that.
Okay. And also one question on the biogas tax exemption that the Swedish government removed recently. Have you seen this affect demand from customers at all yet? And if not yet, is there a risk it might affect demand in the future?
We have not seen any change in terms of the demand, given our customer portfolio we have here in Sweden. In the contrary, we have now extended our agreement with the SL, as mentioned earlier on. And I think that it is excellent that we have now the opportunity to liquefy soon our volumes here in Stockholm region, and gives us additional opportunities to in a flexible way to deliver it to other customers in case the demand would be reducing. But at this point of time, so far, no change.
Okay. And also on gas prices in general, I mean, gas prices have come down a lot from last year. For now, you're mostly on fixed prices, so it's not affecting you at the moment, but you have a strategy, or you've stated a strategy of going on to more market-based prices going forward. So can you give us some pricing points at the moment? Where are biogas prices right now, both in the Nordics and in Germany? Have they come down with natural gas?
We still see ourselves to be able to in taking the company forward to be aligned with our earlier statement with 50 to 100% premium compared to the price we had earlier on, including the production subsidy. So that is what we see still to be relevant in the Nordic market or Scandinavian market based on the agreements we have with our customers. In the German market, both the energy prices as well as the certificate prices came down from the levels they were at the end of last year. Now the certificate prices have bounced back a bit, which is very good, and the TTF LNG price is in the range of 40 euros per megawatt hour. From our perspective, I would say so that it implies that if current prices would prevail in the German German market, that would imply for us that when we are using manure-based feedstock, that will get for that biogas volumes, we will get very favorable prices still in the German market. Then for say non-manure based feedstock, for that part, the price levels, the price difference between the German transportation sector and the Scandinavian high end is fairly limited.
Okay. And just to be very clear, so you said this was based on your agreements, but the new agreements that are being signed on the market, are you saying that they are being signed on at the same price points? So biogas has been sort of more resilient.
I am now referring to the new agreements we have signed since end of last year. So it's given the flexibility and dynamics we have there, they are not 100% linked to the market prices. So they are impacted of the market prices, but not one-to-one.
Okay, thank you. And on your current or the new pipeline that you showed us up until 2026, specifically on the 2 German plants that you added, can we assume that all the volumes from those are going to be sold at the highest price point with the certificate volume or certificate prices included as well?
It's a bit too early to be so specific. Of course, it would be very logical to assume that the volumes will be sold in Germany. At this point of time, there are no confirmed agreements for the offtake. It's part of the preparing for the FID for those projects. But I would believe that we will. It depends also on the feedstock, how much of the feedstock is manure, how much is other non-manure type of feedstock. So therefore, I would say it's fair to assume that we are somewhere in the average of the German prices in the transportation sector market. Average, I would assume currently to be above the Scandinavian prices.
Okay. And one final question from my end before I wrap up. On financing, I mean, it's a very ambitious pipeline that you showed us. And for the expansions that you have taken an investment decision, you've said before that you won't need any more equity financing. Is that true even if you go ahead with all the expansion projects on the pipeline that you showed us? Can all of that be financed with internal cash flows and debt, or would that need more equity?
Given the fact that the total investment value we estimate to be in the range of 300 million euros plus, I mean, to achieve additional 500-600 GWh, it is also necessary for us to assure that we have part of that financing in equity, majority, however, than debt capital, but and also grants, but additional equity is reasonable to be assumed to be part of the financing package.
Okay, thank you. That was all from me.
Thank you, Adrian. Okay, then please, others, questions?
Yes, Samuel Wilhelms from Nordea Markets. Thank you for the good presentation. I had 2 questions closely linked to each other. Well, first of all, like so far, what I've understood that the big picture in getting your operative EBITDA margin from 6% to 30% within the next 20 months, it comes from the new agreements with higher pricing. But like given that their effect is limited this year, as you stated, and in 24, according to your graphs, still nearly 50% of the agreements are still these old agreements. And at least for me, this equation seems a bit challenging, even though we've seen elevated biogas prices in the market. And you have mentioned also these so-called operational improvements as one profitability driver. I was thinking that could you open these improvements in more detail a bit, given that you're still expecting production costs to go up? That what are these operational improvements?
I think that the core in terms of operational improvements is related to higher capacity utilization. That's one dimension. And then related to the activities on our facility in Södertörn, we are actively working with continuous improvement, partly related to the existing facility and improving it operationally, but also looking carefully for the additional add-on investments to resolve bottlenecks in order to enhance the capacity utilization increase by 30 GWh. So that is something which is working in progress. And as I mentioned already during the presentation, part of that is related to also assuring high utilization of the capacity in Norway.
Okay, a bit of a follow-up on that, because you've indeed stated that you are unhappy currently with the low capacity utilization. Is the, like, just to kind of figure here that the capacity utilization, why it's too low? Is it because, for example, raw material prices are so high, so it doesn't like make any economic sense to run them in full capacity, or is it more of a technical? And just to add on that if you're planning to improve your capacity utilization by, for example, increasing the volumes of the incoming substrates, do you see that this could have any risk on your margin development given the current inflationary environment?
The key point in this context is in Norway. It's mainly related with technical issues, and in order to achieve the higher utilization rate, and as I mentioned earlier on, the activities to resolve it have been now executed or are more or less finalized as we speak. So that is a area where we are expecting improvements already during this quarter. In terms of then ramping up the capacity utilization, some additional feedstock will be needed. I would not believe that we would see any substantial change, negative change in the COGS when adding or increasing the production volumes.
All right. Thank you very much for that. That were all questions from me.
Excellent. Any other questions? Okay, if we don't have any more questions, then thank you very much for active participation and good questions. And we wish you a very good, a nice day. Thank you very much for participating. Bye.